If your mortgage was denied, listen carefully because this might be the most important video you watch this year. Most people think loans get denied because they don't qualify. That's almost never the real reason. In reality, mortgages get denied because something inside the file was structured incorrectly. And today, I'm going to show you exactly what those things are and how they can be fixed. My name is Joseph Correa, and I'm a licensed mortgage broker and founder of Finity Mortgage. And I analyze files every single day when it comes to loans. And I've seen borrowers with perfect credit get denied. And then I've seen borrowers with low credit scores get approved. The difference isn't luck. The difference is understanding how underwriting actually works. Most people never get taught about this, okay? They just apply and hope for the best. But mortgages aren't random. They follow very specific approval logic. Once you understand that logic, you can dramatically increase your approval odds. So let's break down the 7 real reasons mortgages get denied, starting from the one that surprises almost everyone. Reason number 1, debt to income ratio structure. The number one reason loans get denied is not credit scores. It's because of the debt to income ratio, which is also called the DTI. This is the relationship between how much you earn and how much you owe. But here's what most people don't realize. It's not just about your debts. It's about how they're structured. For example, let's say we have 2 borrowers that could have the same exact salary and the same exact total debt. One gets approved, the other gets denied. Why? Because the total debt, payment amounts, and timing matter more than the total. I've seen borrowers qualify instantly just by paying off the right account instead of randomly paying down balances, which a lot of people do. Strategic debt reduction can completely change an approval decision overnight. That's why professional file restructuring before applying is so powerful. Now let's talk about reason number 2, credit timing mistakes. The second real reason loans get denied is credit activity at the wrong time. A lot of borrowers think that once you're pre-approved, they're safe. They go finance furniture, they open a new credit card or co-sign for someone, and they don't realize that lenders check credit again before closing on that mortgage or on that loan, okay? So that's something very important to take into account. Don't apply for any other loan debts in the middle of the whole transaction. Even a small change can lower your score or increase your DTI, enough to cancel your approval. I've seen loans fall apart days before closing just because of this. Mortgage applications require stability. Most underwriters, they want to see consistency, not just changes. So timing matters just as much as credit quality. Reason number 3, employment documentation problems. The third reason mortgages get denied is employment issues. And I don't just mean losing your job, okay? Even strong borrowers can get flagged if their employment documentation isn't clear. Underwriters must verify that your income is stable and likely to continue. If there are any gaps, inconsistent hours, or unclear pay structure, they can't assume anything. They have to review the file and understand exactly what's going on with your employment. Let's say someone recently changed jobs, which is common, that happens every day. That doesn't automatically mean denial. But if the new job isn't documented properly, it creates uncertainty. And uncertainty equals risk in underwriting definitions. This is why professional loan file preparation matters so much. The same borrower can look risky or strong depending on how the file is presented. Reason number 4, bank statement red flags. Another huge reason loans get denied is bank statement issues. Underwriters must understand and must be able to verify where your money actually comes from. So if there are large deposits that can't be sourced or explained, what happens is that creates a problem. They aren't allowed to guess. They need documentation. Underwriters need certainty. Many borrowers think, it's my money, why does it even matter? But lenders have strict guidelines about verifying funds. If deposits aren't documented correctly, it can delay or stop the approval. This is why random cash deposits before applying can cause serious problems. The money might be legitimate, but if it can't be proven on paper, underwriting can't use it at all. Now let's go over reason number 5, wrong loan program. Now this is something that's such an important reason why loans get denied. This is massive, okay? And most borrowers never hear about it because they don't get to see inside their loan files. They don't even know what program they're being qualified for initially. They just find out they were denied. Many people who get denied actually qualify for a mortgage. They were just placed in the wrong loan program. Different loan programs have different rules. Some allow lower credit scores, some allow higher debt, some allow alternative income documentation, and if you apply for the wrong program, you can be denied even though another program would have approved you instantly. I've personally seen borrowers get denied, switch programs, and get approved within minutes or days. Some borrowers might not see the same thing that other borrowers see, but the same borrower, same income, same property, only the program changed and they got approved. That's why choosing the right loan product is just as important as qualifying. Reason number 6, property problems. Sometimes the borrower qualifies perfectly, but the property doesn't. And this is something that can be very frustrating. Okay, it's something that you can't control, but it's still part of the process. Mortgage approvals depend on both the borrower and the property. If the appraisal comes back in a little bit lower or a lot lower, the lender may not be able to approve the loan. If the property has condition issues or title problems, underwriting can't clear the loan for approval or for closing. This surprises borrowers because they assume approval depends basically only on them, but the property is part of the risk calculation too, and it's something that has to be taken into account. Reason number 7, file structure and presentation. This is the hidden reason why most people never learn about what's going on behind their file. You can have a strong borrower with a weak file presentation and still get denied. Underwriters don't meet borrowers. They only see documentation. So the way the file is organized, documented, and explained matters tremendously, okay? Professionals know how to structure files, so underwriters see strength instead of risk. That's why 2 lenders can review the same borrower and give completely different outcomes. Now, let's go over the most important thing I want you to understand from all of this. A mortgage denial isn't always a final decision. Many denials are fixable. Change the structure, change the documentation, change the program, and you can completely change the result. I've seen borrowers go from denied to approved faster than they can ever expect once the real issue is identified. If you want to learn how to analyze loan files, structure approvals, and understand mortgages like a professional, I teach this entire step-by-step process inside my training programs, and they're linked below in the description. And if you've ever been denied before, comment denied below, and I may analyze your scenario in a future video if you would like me to. Thank you for watching this video. Don't forget to subscribe and like this video.